The personal loan market is saturated. There are hundreds of places you can apply for a loan, but not all of them will lend to people with less than perfect credit. Borrowers with poor credit may have received offers in the mail from OneMain Financial. You might be wondering whether OneMain would be a good option for a personal loan. OneMain operates a hybrid model. They offer online loans, but they also maintain over 1,300 physical branches in 47 states. The terms and conditions of their loans vary from state to state. That is perhaps the biggest challenge of reviewing OneMain Financial. Things will be different based on your state. Loan terms, origination fee amounts, other fees like late fees and NSF fees, and other policies will all depend on what is allowed in your state. For that reason, you absolutely have to be extra careful in reading the fine print before you accept the loan. You could do research online about them only to find that most of what is said doesn't apply to you because they are in a different state. If you've used OneMain Financial before, leave a comment about your experience and their policies. Your experience could help others know exactly what to look for when they're evaluating OneMain as a lender. So even though things can be different state by state, there are some general things we can say about OneMain. OneMain offers fixed rate installment loans ranging from $1,500 to $20,000 with terms typically spanning 24 to 60 months. They offer both unsecured loans as well as secured loans that you use the title to your motor vehicle as collateral. Many times, larger loan amounts will require you to secure the loan with the title to your motor vehicle. If you do secure the loan, it is possible that you could be approved for a loan that is actually larger than $20,000. It will depend on the value of your car and your income. Putting up collateral will also help you get a lower personal interest rate. Just over half of their personal loans are secured, so it's not uncommon. But you should be really cautious about securing a personal loan with your motor vehicle, especially if it is your primary means of transportation. If you struggle to repay the loan, they can repossess your car. Every state has different laws. Some states protect the lender more than the borrower. Some states have strong protections for the borrower. Falling behind on a secured personal loan could cause you to lose your car, and your financial situation could get much worse. It is possible that the slightly lower APR that you would get securing the loan would not be worth the added risk. OneMain's personal loans have an APR that range from 18% to 35.99%. I suspect that the average APR of their loans is probably 26%, and most of their loans will fall between 22% and 32%. So taking 4 or 5 years to pay off one of these loans could end up costing you thousands of dollars in interest. OneMain does make a point of the fact that they do not charge a prepayment penalty on their loans. First of all, I don't know a single lender that does, but they do have 2 ways of calculating interest on their loans, and they are not remotely the same in terms of how it impacts how you pay off the loan. The 2 ways are precomputed interest and daily simple interest. Almost all personal loans are calculated with daily simple interest. That means that your interest is accrued daily based on the total outstanding principal. That means that if you make extra principal payments, your balance drops and you are accruing less interest at the daily level. OneMain also offers loans with something called precomputed interest. That means that they have forecasted out the total amount of interest you would pay over the total term length of the loan. When you make extra payments, your payment is going towards extra precomputed payments. In that case, making extra payments will help you get out of debt sooner, but it won't actually save you any money on interest. With a precomputed interest loan, the only way to save money on the interest is to pay off the total principal all at once. Only then will OneMain give you a prorated discount on the remaining interest. It's possible that precomputed interest loans are only offered in states where it's allowed. You may not actually be given a choice, but if you are, you should definitely take the daily simple interest loan. And if the precomputed interest loan is the only one offered, I suggest you look for a different lender. I don't see a good reason to ever take a precomputed interest loan. While they do not publicize a hard minimum credit score required for application, OneMain specializes in lending to people who have less than perfect credit. I would assume that if your credit score is 650 or better, you could get a lower cost loan elsewhere. And if your credit score is below 550, you probably wouldn't be approved without securing the loan with the title to your motor vehicle. In short, OneMain is for individuals with damaged credit or limited credit history. In order to apply, you will need proof of identity like a government-issued ID, proof of residence like a utility bill or a signed lease, proof of income like pay stubs or tax returns, and collateral documentation if you are securing the loan. The documents would include your car's title and proof of insurance. A significant part of OneMain's business model involves optional insurance products. These are designed to cover your loan payments in the event of unforeseen circumstances. Credit Life and Disability pays off or covers the loan if you die or become disabled. Involuntary unemployment insurance covers payments if you are laid off. Gap coverage covers the difference between the loan balance and the car's value if it is totaled and would only be considered if you're securing the loan. Most lenders out there do not offer insurance at all, so I think it's a fair question to ask whether you should consider buying it. And I'm going to be honest with you, I don't think you should get it. OneMain's insurance pays out in claims about 45 cents on the dollar that they bring in premiums. Most regulators set a minimum of 60 cents on the dollar as a fair value for insurance. That means that this insurance is either overpriced or rarely paid out, or a bit of both. If your loan is unsecured, you should definitely not get the insurance. The only reason to get the insurance is if missing payments could put your car at risk of being repossessed. And even then, most of the reasons people struggle to repay the loans have nothing to do with the situation that the insurance covers. Once you have paid off a significant portion of the OneMain personal loan, they will reach out to you with the option of refinancing. Refinancing is essentially taking out a new loan and paying off the old one. OneMain will tell you that there are two benefits of refinancing that include the fact that you can lower your monthly payment and you can take out more cash. The problem with refinancing is that it resets the term length of your loan. That's why the payment is lower. So your lower payment comes at the expense of pushing out the payoff date of your loan. From my point of view, there's really only one good reason to refinance: to lower your interest rate. If they aren't offering you an interest rate that is at least 2 to 3 percentage points lower than your current rate, don't refinance. And even then, you should take the money that you save on your monthly payment and consistently put it towards principal. That will mitigate the longer term and help you get out of debt faster, while also paying less in overall interest. So what are the pros and cons of taking a OneMain Financial personal loan? The pros include fast funding, in some cases as soon as an hour, high approval rates for non-prime credit scores, flexibility in accepting secured loans and joint loans, and the fact that you can walk in and talk to a human being in one of their branches. The cons include relatively high APRs, lack of transparency before you apply, expensive insurance products, and barriers to paying the loan off early, like refinancing or precomputed interest loans. If you choose OneMain, you must be a disciplined consumer. Look closely at the terms and conditions before you accept the loan. Keep an eye out for the following things to make sure you aren't surprised by their policies after the fact. Historically, OneMain has faced regulatory scrutiny, including a major CFPB settlement regarding add-on products. Ensure you understand that insurance and membership clubs are optional. You do not need them to get approved. Their APRs are high. If you have the luxury of time, pre-qualify with other fair credit lenders first. If you secure the loan with your car, remember that a default doesn't just hurt your credit, it leaves you without a way to get to work. Watch out for loans that have pre-computed interest because they will be harder to save money when you pay the loan off early. Finally, make sure that OneMain is not the only place you check before you accept one of their loans. Every lender has a different algorithm. You could get a better deal from another lender because of your credit profile matches their ideal customer. We've tried to make it easy to check your rate with several lenders at once at the Yukon project. If you go to our marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of your approved offers, so you can be confident that you're getting the best deal that you can in your situation. A personal loan from OneMain Financial may be the personal loan you need, but it's important to be sure that you have your eyes wide open before you sign on the bottom line. If you found this information helpful, please like this video and subscribe to our channel. Your support helps us out, and we really appreciate it. Thanks for watching.